And also Happy New Year to each and everyone again, once again, for your continued support throughout the year. Basically, I want to take this also opportunity to apologize to you all, for all the inconvenience and the technical issues. I think Sir David has already done that, so it's only proper if I also go ahead and just echo on that. We're not gonna probably go into the commercials part of it, so we're just gonna go straight into the show. But our guest for tonight is Nana Kwame Akowa, CEO of Tri City Business, and he will be talking to us about financial planning and taxes. And since January through March is the tax season for USA, it will be proper for us to understand some of the things and the requirements that we need to get our taxes right, and also some of the things that we could be writing off, or some of the things that we could be filing, or we should be filing taxes for. And also, as part of a New Year resolution, how best we can plan right after spending all the money through the Christmas and the New Year holidays. How do we plan accordingly to make the year a prosperous one? So again, thank you all for your support and also contribution as well. Nana, welcome on the show. Nana, you're on mute.
Thank you very much. Yeah, sorry about that. I was on mute. Thank
Yeah,
you.
thank you. I can hear you so much better now. So,
Oh,
first of all, how you feeling?
good. We are in a busy time, but everything is going really well. So just taking it one day at a time.
That's good. That's good. Thank you very much for taking this opportunity and also honoring our invitation. I'm going to hand over to you, and you get to do all the talking right now. So go ahead and tell us what we need to know in order to make ourselves better when it comes to finances. Thank you.
Awesome. Thank you very much. So I want to start off really quick with just what I'm going to go over. And then I want to say that to do a very comprehensive presentation on finance, it takes way more than an hour. But I'm going to hit on as many things as I can so that everybody can have all the information. And then if you have specific questions, then I can answer so I can really help somebody on here. So we'll go through the introduction, who I am. I'll talk a little bit about myself, not too much. But what I want to do is I want to go through some two key principles for financial success. Then we dive into budgeting, taxes, credit, investment, and insurance. And then I'll explain a little bit of everything so that we can kind of take all that information and then decide what direction we want to go based on the questions that come my way. And then please do stop me at any time. Just raise your hands. I'll keep my eye on the screen. If you have any questions, if you want to interrupt me at any point in time, I'm happy to do that. This is a disclaimer that professionally I have to give because I'm not doing this as a way to sell you services. This is purely for information purposes. I do highly recommend. I am a tax professional, but if you have your own professional person that does your taxes or your legal services, or you have your own financial planner, you can always seek detailed information as it pertains to your particular situation. Because what I'm going to give you today is just very general. Okay, so I just wanted to kind of put that out there. So I've been in finance for over 9 years now. I currently am the principal accountant for Tri City Business. It's a business that I founded, and I have a partner that I run with. Um, I've been in accounting and finance. I've done a lot of different things within the umbrella of accounting and finance. But my key area that I practice in is doing taxes and doing accounting for small businesses. So if you have any questions in those areas, I can help. But I have been a financial advisor before, so I have a lot of experience in that area as well. So I am going to dive in because I think we have a very limited time. My goal, I love interaction. I'm not one that stands on, I'm not a motivational speaker. So if you have questions, ask me. Over the years, as I have practiced finance, one of the things that I have really run across is at the heart of every financial planning, every financial success is these three things. You cannot succeed in finance without them. So I always have to bring them up front so it will be at the back of your mind. So consistent strategic planning. What we've seen done over the years within our community, especially in Ghana, is we a lot of people one they don't plan at all. So they live day by day. When the money comes, then they spend. When they don't have it, then they go looking for some. There's no planning. For those who plan, they plan, but they are not strategic in their planning, meaning they don't put a lot of thought to their planning. They don't look at the impact of even the decisions that the planning is going to have on them. And especially if you are based in the US, strategic planning is key because your tax laws, the legal system can really affect your financial plan. You can do all the planning, but if you have not thought about how Uncle Sam is going to eat into your money, all that planning can go down the drain. There's one of the very interesting, very sad story. I don't know if you guys heard of the Bernie Madoff issue in the US, but I learned it in school. And in the documentary, there was a gentleman in there that used to invest with that company. All his investment, he did a lot of planning, but all his investments was in that one company that was run by Bernie Madoff. It was so all his investment was with one person. And then when the scandal hit and they lost all the money, he lost over $3 million. So somebody that is getting ready to retire with over $3 million now was left with $0. And in the documentary, you can see now he was working at Walmart. So it's not that he didn't plan. He wasn't strategic in his planning in that sense because one of the biggest advice in investment is diversification. When you invest, you have to diversify. In this case, he did not diversify his investments, which cost him on the back end. So think about financial planning. You have to be strategic and you have to be consistent with it, meaning you have to keep doing it. When you plan, things change, life change. Um, you guys know there's a boom and there's a bust. We've been hearing that this year a lot of people have been saying we don't know when it's going to happen, that there's going to be an economic downturn. What does that even mean? How do you plan around that? If you are not consistent with your planning, whatever situation that you planned your finances within, as life changes, that also changes. So you have to do it consistently. What I always tell people is you budget monthly, you do your financial planning annually. So every year, you find time every year to do your financial planning. Beginning of the year is a great time to do your financial planning because there is different things. Everybody's excited about the new year. So many things happening. So this is a great time to sit down with your family or by yourself if you're single and then plan what is going to be your financial outlook this year. How much are you looking to spend? How much are you looking to make? Just have a game plan in place. What kind of jobs are you going to go after? Are you going to run a business? How are you going to just live your financial life? So that is the heart and the bedrock of financial success. Consistent strategic planning. You can never succeed if you're not doing it continuously. And if you're not strategic, it won't work. You have to do all three. Okay. And then we will go into the details of all of the technical part as we go through this presentation. And the next thing I also want to mention here is every journey of 1,000 miles begins with a step. Don't discount the little progress. It's so sad whenever I start doing financial planning with people, when I work with them one on one, the majority of people that quit in the middle of the road do that because they don't have the patience. We love overnight success, but the truth is there are very few people in life that will ever have the opportunity to be hit by a big opportunity, like win the lottery or get a windfall out of somewhere. 99% of us, the way we make money will be consistent, slow steps. savings over time, doing little steps, building it over time, $10 here, $20 here, $100 here, $1,000 here, and all of a sudden we see ourselves in the hundreds of thousands and even to the millions. But it starts with consistently doing it. There's nothing that will come out of, waiting for something big to fall. So it's always important to keep in mind that in finance, the best way to succeed and be successful is to be consistent and then do it over time. Because the truth is, where you are today, as you are listening to me, your current situation, where you are working, the house you live in, the kind of car you drive, the kind of debt you have on your books, every single thing that is happening to you today is is all a culmination of the decisions you've done in the past few years. Every single thing that is happening to you today has been because you made a decision yesterday that is affecting you today. So the trick is making good decisions today to put you in a better place tomorrow. Okay. And then one of my favorite quotes: never let the fear of discipline deter you from your dream, but rather let the passion for your vision drive your drive your vision. Because the truth is, if you are very passionate about your vision, then that will drive your discipline and that will make you successful. So that it's a nutshell. So those two things, okay, those two things, please do not forget them. Consistent strategic planning, and then always never despising small beginnings, making good decisions today that can affect you tomorrow. And it always starts small and you do well when you go that route. I want to give a big overview of finance. Okay, I'm trying to run through this, like I said, because I really, really want questions. That's where I really want to take this conversation. In the US, in Ghana, wherever you find yourself, you can never go outside of these five things when it comes to finance. This is what I call the financial house. It's a program I run. I call it the 360 Finance, but think about a financial house. At the foundation of it, think about any house you live in. At the foundation of the house is budgeting. How you budget. That is what supports every single financial decision you make. Your budgeting. How much money do you bring in every month? How much money do you spend? Okay. Then your credit, your investment, and your tax planning. Those three things are like the pillars that hold the house together. So your good credit, I'm going to dig deep into all of these areas, so don't worry. But these three things are the pillars, right? And what protects the whole house is your risk management, insurance. When you have all of these five components working together in harmony, you will be in perfect financial sync. And at that point, it becomes very hard to lose financially. So if you have a strong budget, you have a very solid credit, you have good investments, you know about your investments, you have a great tax planning strategy in place, and you have all the good insurances that protect you from any unexpected risk or loss, you will be good. That is essentially the totality of financial planning in everywhere in this world, especially in America, okay, especially in our system. So here's a little question, and you can put this in the chat if I always kind of want to pick your brain on this. Ignore the QR code for now because I'm not going to be going back and forth to check the results. But just bear with me and then just tell me what you will do. There are two buckets here, right? Two buckets here. There's bucket A and bucket B. And then you make $100 a month. Every month you work, you make $100 a month. And then this month you work, you made $100, and then you want to buy, let's say, a lottery ticket, which will give you the chance to pick a ball from each bucket. In bucket A, there are 100 balls in there. In bucket B, also there are 100 balls. In bucket A, you pay $100, you can only pick one ball. In bucket B, you pay $100, you can only pick one ball. There's 100 in each of them. But in bucket A, out of the 100 balls, there's one of the balls in there that has $1 million ticket. Like there's $1 million check. The rest is zero. There's nothing in there. So there's 100 balls, but one of them has $1 million. You don't know which one. The rest of them is all zeros. In bucket B, you have 90 of the balls that have $10,000. And then there's 10 of them that have nothing. You are paying $100 to pick one of the balls. Just tell me in the comment section which one would you pay the money to pick from. You can only pick from one. Okay, so I have one answer says bucket B. I would like to hear at least a few, and then let me know what your thoughts are. Okay, remember you pay $100, and then you can pick one. Bucket A has 100 ball, and you make $100 a month. So this is your monthly income that you are using to pick. This is your monthly income. When you pick, you can make you have here you have 1% chance of making $1 million, and here you have a 90% chance of making $10,000. Okay, so far I have a lot of B's and I have one A. Okay, I have a lot of B's and I have one A. So it says B, I would have said A in my past life. I like that. And then so every time I do this exercise, once in a while you get a few people that would say A, but 99% of people always choose B. Because psychologically we want certainty, right? That's how we are as human beings. Psychologically, we want certainty, we want security. We want to know that the investments we are making or the decisions we are making will have a certain level of certainty for a good result. There are some people that are high risk and they'll go in and they don't care even if they lose it all. But most people in life are very big on certainty. So even though we know that there's a possibility of making 1 million in bucket A, if we have only $100 and that is our monthly income and we have a chance to make a decision, we will always make the smart decision and go in for the higher chance of success, even though the amount is way smaller, right? And that is essentially the lesson for kind of this exercise. Most people always will go certainty, but the funny thing is we don't always translate that into our life. And that is what I'm trying to draw our attention to. We don't do this with our life. A lot of times the decisions we make don't give us a high level of certainty. They rather put us in bucket A where we have a 99% chance of ending up with nothing. So very few people are even saving for their retirement. But everybody here, unless you die young, will live to retire. So there's two things that will happen to you in life. You either live and retire or you die young. But the truth is, most people don't plan for retirement. The average lifespan in the US is, I don't know the exact number, but I know it's around the 70s. So even if you are going to be an average person, that means you are likely to live to 70. The question is, you cannot work through your 70s due to health and everything. So how are you planning for your retirement? Do you even know the biggest risk right now that is faced in the US is it's not even your life insurance or anything, it's your health and then your ability to pay for healthcare in retirement. That is the greatest risk that most people face in our generation. The question is, how are we preparing for tomorrow? And even today, how are we planning today to live the best life we can? So that is essentially the heart of planning for your finance. So let me start with the budgeting. Like I told you, my goal is to keep this short and then pull out questions. I'll spend majority of my time talking about budgeting and taxes because I know there's a lot of interest, and then the rest I'll just skim over them. So with budget, the key to budgeting is simplification and prioritization. So you budget by keeping first things first. The most important thing always has to be first on your budget, and then making it simple so that it doesn't create any stress. Mostly, I have been budgeting since 2015, never missed, and I do about 30 minutes every month. In the beginning, it was hard. I'll do it, I'll stop, I'll mess up, but eventually I got a hang of it, And now every month I spend like 30 minutes, sometimes even 10 minutes, because it's like I know it often. I know all the bills that are coming. I know what I need to plan for. But what I want to spend time talking about is the three kinds of budgeting we have. There's a zero budget, priority budget, and there's a block system. What a zero budget means is if you are here and you're on salary, if you are getting a W-2 income, that means that every single month you have a certain amount of check that comes to your account. It's consistent. You know exactly how much you make every month. You always have to go with a zero budget, meaning you have to plan what you're going to do with the totality of that money. And your savings should be a part of your budget. Okay. So if you make $1,000 a month, you have to plan for the whole $1,000. So then the net of your budget, your income plus your expenses has to be zero. That is why we call it a zero budget. And you use this kind of budget if you have expected income. And your expected income is if you're getting payroll, paycheck, you know exactly how much comes in between you and your spouse or just you, whatever, however you make your money. That zero budget means you plan for every single dollar that comes in, including what you are saving for tomorrow. Okay. And we can go into details. If you want samples, I have so many different budget samples that I can share that can work with you. There are so many apps there that can help you do this too. Rocket has it, Mint has it, Chase has it. All of the major financial institutions now have a certain budget system that can even go on your phone. So that shouldn't be a problem. And then if you are a business person like I am, or if you do like you're a truck driver, anything you do that you don't have a consistent income, but your activities determine how much you bring home, then you want to do the priority budget. What that is you take all the most important things in your life and then you put them first. Then you go from the most important to the least important. So you start, let's say your rent, your kids' school, whatever you do, you take the most important things, and then you go as you go down, you go to the less important things. So when you make money, your money, and then we encourage you in finance, we encourage you to pay yourself first. So I would say even your savings have to go above your rent. When you make money, every dollar that comes in, you start allocating it to the most important things on your priority budget. So you have a list of the most important things to you in life, your accommodation, your savings, your healthcare, your insurance, whatever. And then as you make money, you pay the most important things first, all the way down to the least important. Whatever your criteria is, that is up to you. But with a priority budget, you go from the most important to the least important. And the last one is a block system. It's like a hybrid, right? It's like a hybrid. So what people do is sometimes you put most of the things that you have into certain blocks, like home, business, utilities. So in under utilities, you can have your water bill, your electricity, all of that. So you put it in different blocks so that when you make money, you can allocate it based on the blocks or based on percentages. You do that especially when you have two sources of income and all of that. So one income goes to this block, the other goes to this block. So you can build your budget like that too. You can build it in different blocks. And under each block, there is a certain amount of expenses that go under there. So you can choose whichever one. Most people that I have worked with always do the zero budget. For businesses, priority budget, you can go wrong. Like even in my business, when I plan for the year, I have payroll. I have so many things that I can go without. Those are my priority. So I put all the income I make first to those things. Then I can look at other business decisions that I need to make to decide how I spend my money. Okay. So those are the three major types of budgeting. There's so many other ones, but these are the three that kind of encompasses all of it. Like I said, there's so many free budgeting tools out there. I have Excel tools that I created myself that if you're interested, I can also share. But there's a ton of free ones, there's a ton of apps that you can use for budgeting purposes. And then tax planning. The what I say the main reason for tax planning is so that you can have more money on you to invest. Okay. And that's the goal. My goal is that, when I do tax planning with clients, I tell them, I don't want you to save the money and just go spend it. I rather you save it to invest so that you can let your money make you money. Okay. So there's the three major buckets that everybody falls in that makes any kind of money. When you don't make money, you don't pay taxes. So I'm focusing on people that make money, right? If you are a W-2 employee, like I said when I was talking about budgeting, that means you have a certain consistent income coming in every month. But I'm getting feedback. Hello?
Yeah, you're
Okay, better.
good.
Yeah, thank you. So you have a consistent feedback, a consistent revenue coming in a month, every month, right? So the key to planning for taxes is knowing your tax rate. It's very easy. A lot of times you can determine your tax rate if you look at your 1040. When you look at a 1040 form, you can look at your taxable income. There's a line called your taxable income. You look at that line. The next line on page two of your 1040 is your taxes, the taxes the government is charging you. You just divide the taxes by the taxable income and it will tell you your tax rate. What you want to do with that information is now, whenever you get a paycheck, make sure the tax rate is exactly what is being withheld so that you don't owe money at the end of the year. Okay. Or you can also take advantage of tax shelters to reduce your taxable income. Okay, so if you think about a 401k, if your job offers a 401k, 401k essentially allows you to put money away that is not taxed. So then that goes straight away, that comes out of your disposable income and reduces your taxable income. The goal of tax planning is to make your taxable income so small that the IRS doesn't have a lot of income to tax you on. Okay, so HSA is a health savings account that you get, no taxes. You have an IRA that everybody gets. You can put money into an IRA. And then for those with kids, you can look at a 529 education plan. That is a plan that allows you to put money away for your children's education in the future, and that is also tax free. And 529 education plan has so many different types. You can have ones that even allows you to not only invest in their school, like their tuition, but even anything that goes with them studying. That means where they live, so you can use it to even rent a house or buy a home. How they get transportation for school, so you can use it to buy them a car, or anything that has to do with their education. Some of them even allow you to pass it on to their siblings. So there are different ways you can look at that. That is why the planning is so important, the strategic planning, because it allows you to adopt all of these tools to put you in the best tax situation as much as you can. The other one is for business owners, self-employed, small business, partnerships, it doesn't matter. You just want to understand what your business is going to bring in and then use that to really know what the impact of that is going to be on your taxes. Now, let me say this. If you run a business, S Corp, LLC, you have to understand that every dollar that comes from your business, let's say you make $10,000 from your business, there is two levels of taxes that you get. There's the self-employment tax and then there's the income tax. A lot of people don't understand this. I have had over 30 people from the people I worked with last year who were doing Uber and they were doing Uber and then Shift and all of those things. And they didn't realize that every dollar of income you record for Uber is taxed at those two levels. So let's say you make $10,000 from driving an Uber, that $10,000 will be taxed 15.7% first. That is just the self-employment tax. Then the whole 10,000 will be taxed again for your income taxes, depending on your tax rate. There's other benefits in there for small business owners, but that is the general rule that if you have any, so you think about it, if you made 10,000, that is over 2,300 estimated that you'll be paying in taxes. If you made, 50,000, then you are looking at over $10,000. So many people ended up with high tax bills from driving Uber and Shift, and they didn't even report it. And then they will get a letter from the IRS because Uber, Shift, and all of these companies report to the IRS. They get a letter, and then they are worried because now they are realizing they have to pay all of this money back to the IRS. And so it's really important that you, if you do any form of self-employment, that you plan for your taxes. Because if you drive an Uber, there's so many little things that you can also deduct from your income that can help you reduce that tax burden. And you want to take advantage of all of those deductions as much as possible. So you just for you to know. So if you have any form of business, you definitely want to do tax planning. It's important to know that you cannot do any tax planning after December 31st. Whatever activity you have ends December 31st. After December 31st, you don't have any economic activity that can impact. So right now, if somebody comes to see me for and then gives me the activity for 2023, and then what can I do to save money for 2023? You are too late. There's nothing I can do right now because everything that has to be done before the end of the year. Because the IRS is getting the information for your finance for your taxes from January to December. After December, everything is going to be for next year tax season. So it's really important to understand that December 31st, everything shuts down, and then you move to a new year. So your best time to plan for 2025 is now, all the way till December. And then you can plan your economic activities to know how you can save money on taxes. The truth is, almost everybody, I can't even think of one person. Anybody, every single person I sit down to do tax planning with saves money. And they all save quite a significant amount because there's so many little decisions that you are probably not making just because you're not planning for your taxes. It doesn't matter even if you're W2, whatever. There's so many little things that can have a huge impact on your taxes. You just need to plan it before the tax season gets there. You don't plan for your taxes when it's time for taxes. So that's really important to know. So just make it a point, schedule. Let's schedule with your tax accountant. Reach out to me. Let's sit down. You will be able to save some money if you plan ahead for the next year. That's really important. The Moving on, I think most of you know credit scores. I do this illustration to explain the impact of a credit score to you. And I did this illustration when the interest rate was a little bit down. So but just see this. If you take a $200,000 loan, and this is just to illustrate how important credit is. I'm not going to go into the details of it. I just want you to know it's important, and I want you to go and do some research. If you ask me questions, I'll be able to answer them though. If you take a $200,000 loan right here, and then if you have good credit, you can get, let's say, 3.5. If your credit is not so good, you can get 5.5, because the mortgage companies always give you your rates based on your credit. Your credit is how the financial institutions know whether they can trust you to pay back the loan. If you look at the payment terms, in 30 years, because of good credit, your total interest is 123,000. But the one that did not have good credit in 30 years would have paid 208,000. Just having good credit gives you $70,000 margin, $75,000 margin on somebody without a good credit. And that is how important credit is. And I use mortgage because that's probably the biggest amount of, that's most people, that is their largest loan they would ever have in life, their mortgages. But they can apply to cars, anything, credit cards, everything you have. Your credit makes a huge difference because the cost of your money is the interest rate. The true cost of your money is the interest rate. So the interest rate is actually what the bank is making from the money they are giving you. So having good credit is really important to beating your rates down. And then investment, like I talked about, it's really important to think about what your money can buy you than and start thinking about what your money can earn. One of the best strategies I've ever heard is you use your income to create investments and you let your investments pay your bills. That is the best way to live. It takes time to build there, but if you can live like that, then you are essentially financially free. You let your income feed your investments, and then your investments will pay your bill. Anybody that can build their life where their investments pay their bill, they are essentially financially free. And that's the goal of everyone. So it's not even that you have debt or not debt. You can have all the debt in the world, but if your investments are paying off those debts, you don't have any worry because you don't have to worry about working to make money. Your investments is what is taking care of you. So I'm not going to go through this, but there's different ways of investing and how you can set your life so that your investments are actually doing well. One key thing is always make sure your investment is ahead of inflation. Don't ever do any investment that is below inflation because if you do that, especially sometimes savings. Some savings are below inflation. The banks will give you rates that are under inflation. If you do that, you're essentially losing money. So don't ever do that. But there's so many different things that you have to consider. My biggest advice is talk to a financial advisor. Don't do it even if you are in finance. Talk to a financial advisor. Because for the past 10 years, I have always had an advisor, and I'm really big into finance. And then the last thing I'll talk about, I would like to touch on is insurance. And essentially, what insurance is, it protects you from risk that you don't have the capacity to handle in case something happens to you. You need insurance. I can't say this enough. You need insurance. I remember I tell this story and then I'll just leave it for questions. When I purchased my first business, when I purchased my first business, the business already had employees, and one of the employees that I brought on board was going down. It was winter snowing there, so they went to help clear the snow. So they went down the stairs to the basement of the building of the business, and then they slipped and fell. And the hospital they essentially broke their their feet. The hospital bills were so much, so they essentially sued the company. They sued my company because they just wanted some of the bills taken care of. But I had never experienced a lawsuit, so I didn't know what to do. But I know I had liability insurance for the business. And then I called the insurance company, and then they took everything from me. They just took everything, and I never heard anything about the case. They hired a lawyer, they did whatever happened till then, I don't know. But the safety of having insurance, that one lawsuit could have bankrupted me and cost me my business. So there's little decisions, and sometimes $100 here, $200 here, it adds up. But there are some expenses that when it hits you, you don't have the capacity to handle. So buying insurance gives you the protection, and also it gives you the opportunity to pass your wealth to your children in a way that is tax free and secure. So important to me. I have seen so many young people that have come to me that are really wealthy because their parents left them wealth. There sometimes when you sit down to some of these clients, it's amazing, but that is what their parents did. Their parents thought of them long ago. So now they are living off of the fruits of their parents' decision, and we all have the opportunity to do that. So don't over purchase insurance, but definitely have something in place to leave a legacy to protect you from things that you cannot expend yourself, and then to be able to also help you just have a peace of mind. You just want a peace of mind. You don't want to be in a situation where you're always looking around you and looking back at you. One more story. I remember I bought a phone. My wife and I, when one time we went to buy an iPhone, that was many years ago. It was one of the ones that had come out. And then they asked me for insurance, and I said, no way, I don't want insurance because I'll just. The moment we left, I tell you, even before we sat in the car, she dropped the phone and broke the screen. But the good thing was, I have a friend that fixes phones, so he ended up helping me. But still, I was thinking about it. I'm like, man, So but that phone, the reason why I didn't care for insurance is, even though the phone can be expensive, that wasn't an expense that I couldn't bear. Buying my wife a new phone wasn't going to be a problem. So I didn't see the need to buy insurance. But if it was an expense that I couldn't afford, I would definitely have bought that insurance. So, that's just the nutshell. It's important to have insurance for risk that you don't have the capacity to bear. With that, I'll open it up for questions.
All right. So, ladies and gentlemen, at this point, if you have any question, please unmute yourself and ask your question.
Hi, PJ. It's Oba.
But go ahead.
Yeah, I don't have a question, but I just have a contribution. The topic of having insurance is so important. I can't stress it enough. I have a few people that I know who, basically when they came from Ghana to here, they really did not understand the essence of having an insurance car. It's like I have a vehicle. I'm going to be very careful when I'm driving. I don't need an insurance until one day, they got into an accident and wish. And since then, they've always had insurance. So I just want to reiterate what he just said about having an insurance. You have it just in case. Yes, you may go a whole year without any incidences, but the day you really need it, you'll be very happy to have had it. So, yeah, thank you.
Thank you
Thank
very
you.
much.
Appreciate that.
Any more question? Please unmute yourself and ask. Any more questions?
And if you have a question on a topic that I didn't touch on, as long as it's related to finance, please feel free to ask. Okay.
Any more question? Please unmute
I have a
yourself.
question. So, how can one, I know you said it's good to save and invest. How do you tell someone who just, they're living paycheck to paycheck? How do they find them? So how can they budget well enough to have something to save?
Okay. No, thank you for that. So, what it's important to realize that is savings is more so an attitude more than just something that you do because you have more than enough. It's a character thing, and I'll use my story as an example. When I started my journey in personal finance, that was the first lesson I was taught: savings. And I remember I was doing about $10 a month. I just needed to put something away. Since that time, this was around 2013 till today, there has never been a single month that I haven't saved something. Whether I have money or not, it doesn't matter. Even when there is debt, I have to make sure that a small portion of my money is being put away for savings. And you have to build that character. So the strategy to go, which I've used for all these years, is automation. My savings always comes out of my accounts automatically. Because think about it, if I realize that if I have car note or have car insurance or life insurance, whatever insurance I have, or whatever expenses that I have, I pay them, with consistency. So if that is how I'm going to be, then I have to make sure that I also save my money consistently. Whenever you put your savings to your willpower, some months life becomes so tough. We all go through difficulties in life. Some months life becomes so difficult, you may put your savings second. But for me, the day my money hits, it immediately hits, that part already is taken out. I don't even get to plan with it. So it doesn't even show up. So the start of it is start with something small, something that you can maintain. So even if you don't have enough,